On the morning of May 12, 1931, Klaus Becker walked into the Danatbank branch on Mönckebergstrasse in Hamburg, carrying a withdrawal slip for 800 marks. He was a dockworker. He had saved for 14 years. The money sat in a regulated savings account at one of Germany's largest banks. That morning, he wanted it in cash. The branch manager saw him waiting. He walked Klaus to his desk. He spread a newspaper across the surface. The headline said Creditanstalt had failed in Vienna the day before. The manager tapped the page. "This is Austria," he said. "German banks are sound. Your savings are protected. There is no cause for concern." While Klaus was watching that newspaper headline on Mönckebergstrasse, a senior Danatbank executive in Berlin had already read a different version of the same news through a private telegraph 2 days earlier and had already given the order to liquidate. 2 men, same currency, same regulated institution, opposite information. Only one of them was going to keep the money. What Klaus did next, and what happened to the apartment he and his wife Helene had planned to move into that autumn, 3 rooms near the harbor, was decided not by the bank's solvency. It was decided by which information system he had access to. The mechanism is not the collapse itself. The mechanism is the gap between institutional knowledge and public announcement. By the end of this, you will see exactly who moved their money during reassurance windows and what that lag cost the people who trusted what they were told. Creditanstalt was not a small Austrian bank that failed in isolation. It held more than a quarter of Austrian banking sector assets, a share of the country's entire economy that no bank failure of that scale had ever touched before. The Rothschild family had controlled it for decades. When it announced in May 1931 that it could not publish its 1930 accounts, the shock was not that the bank had problems. The shock was that even an institution of that scale could collapse. Here is what mattered about Creditanstalt. It sat at the center of a correspondent network linking Vienna to Berlin to Hamburg to London, settlement channels built on reciprocal credit lines and shared liquidity. German banks, Danatbank among them, depended on those flows. When one anchor failed, the tension transferred. When Creditanstalt collapsed on May 11th, this network, built for fast institutional settlement, did exactly what it had been designed to do. It moved information at one speed for the banks themselves and at another speed for everyone else. The information about Creditanstalt collapse did not arrive everywhere at the same time. The days before the public announcement, a telegraph arrives at Danatbank headquarters in Berlin through the correspondent network, the private line that connects banking executives across borders. The Austrian bank Creditanstalt is losing liquidity. Fast. An executive reads the alert. A risk committee is called. The order goes out within hours. Liquidate exposure to Austrian correspondent positions. Sell what can be sold. Move reserves to liquid assets. Reduce interbank lending. This is not panic. This is protocol. The institution that knows first repositions. The institution that learns second takes the loss. By the time Creditanstalt collapse appeared in the Hamburg newspapers on May 12th, Danatbank had substantially reduced its correspondent position with Austrian counterparties. Other Berlin banks had done the same. They had moved money out of correspondent networks and into government securities, gold reserves, foreign currency deposits. That same May 12th, branch managers in Hamburg received a memo from Berlin headquarters. The language was precise. Reassure retail depositors.
Creditanstalt is an Austrian issue. German banks remain sound. Maintain confidence. Prevent panic withdrawals. This was also protocol. Headquarters knew first. Headquarters repositioned. Branch managers received guidance only after the institutional money had moved.
The wealth transfer happens in that window, not during the panic, not during the bank run, during the reassurance.
Klaus walked home to Helene that afternoon and told her what the branch manager had said. She was sitting at the kitchen table, near the window, with her sewing basket open. A navy coat lay across her lap, piecework from the tailor on Wandsbecker Strasse. The thread was the color of rust. She was mending the lining where someone had torn it. Klaus stood in the doorway with his cap in his hands. He told her the manager had shown him papers. He told her the bank was regulated. He told her the Reichsbank stood behind Danatbank. He told her panic withdrawals harmed everyone. He told her their 800 marks were protected. Helene looked at him. She did not say anything for a moment. Then she asked if he believed the manager. Klaus sat down. He said he did not know. He said the man had seemed sure. He said the newspapers that morning had printed the same thing. German banks were sound. Creditanstalt was isolated to Austria. The panic would not spread. Helene asked what would happen if they withdrew the money. Klaus said they would lose the apartment. The landlord had already taken the deposit in April. The lease was signed for September 1st.
3 rooms near the harbor, 45 marks a month, walking distance to the docks. They had planned this for 2 years. Helen asked what would happen if they did not withdraw the money. Klaus said nothing. She finished the stitch she was working on. She bit the thread. She folded the coat and set it aside. She said they would wait 1 more week and see what the newspapers said. That was May 12th. The next morning, Klaus bought the Hamburger Fremdenblatt at the kiosk near the dock gates. The front page carried a statement from the Reich Ministry of Finance. German banking institutions remained secure. Depositor confidence was maintained. The Austrian crisis would not affect German savings. Klaus read it twice. He folded the paper and put it in his coat pocket. He worked his shift at the docks. 800 marks was 14 years of saving. Enough for the apartment and 6 months of rent if Klaus lost his job. That was what Helene had said when they opened the account in 1917. She had written the number on the inside cover of the passbook in pencil. She had drawn a line under it. On May 19th, Klaus returned to the Mönckebergstrasse branch. The doors were open. The marble floor was crowded. Men in dark coats stood in lines at the teller windows. Klaus waited 23 minutes. When he reached the counter, he asked to see his balance. The clerk showed him the ledger. 800 marks. No change. Klaus asked if the bank was safe. The clerk looked at him. She said the bank was regulated. She said the Reichsbank stood behind German banks. She said if everyone withdrew their deposits, the system would collapse. She said Klaus's savings were protected. Klaus went home. Klaus said he did not know. He said withdrawing might cost them the apartment. He said not withdrawing might cost them the 800 marks. They decided to wait. June passed. The newspapers continued to print reassurances. Klaus returned to the branch twice more. Each time, the same manager told him the same thing. German banks sound. Austrian problem. Reichsbank standing behind everything. Each time, Klaus went home and told Helene. Each time, they decided that waiting seemed safer than panic. They waited. On July 13th, Klaus woke at 5 in the morning, as he always did. He dressed,
He walked to the Mönckebergstrasse branch to check his balance one more time before his shift started. The doors were locked. A public notice was pasted to the glass. Klaus read it, standing on the sidewalk. Danatbank had suspended operations, effective immediately. Depositors would be notified when withdrawals could resume. The notice was signed by the Reich Ministry of Finance. Klaus stood there for 11 minutes. Other men arrived and read the notice. One of them kicked the door. Another one sat down on the curb and put his head in his hands. That evening, Klaus walked home to Helene and told her the bank was closed. She asked if the money was gone. Klaus said he did not know. The notice had said depositors would be notified. He said maybe it would open again in a few weeks. It did not open in a few weeks. In August, Klaus walked to the landlord's building on Grindel Alley and asked if they could delay the September occupancy until the bank reopened. The landlord said the apartment was already re-rented. The deposit was forfeited. Klaus walked home. He told Helene they had lost the apartment. She asked about the 800 marks. Klaus said the bank was still closed. He said the ministry had not issued any new statements. He said the passbook was in the drawer next to the stove, where they had always kept it. He said the number was still 800 marks. He said the passbook was just paper now. The apartment stayed rented to someone else. The money Klaus and Helene had saved for 14 years stayed frozen inside a bank that no longer opened its doors. Danatbank did not collapse suddenly. By early June, headquarters possessed internal liquidity reports showing reserve shortfall, documented later by the Banking Commission inquiry. Through mid to late June, headquarters negotiated emergency Reichsbank loans. The loans failed. The crisis was visible to anyone with institutional access. Through that same period, branch managers received explicit instructions. The directive was simple: maintain depositor confidence. They followed it for weeks, while headquarters already knew the bank was insolvent. On July 13th, 1931, Danatbank announced public closure. Retail depositors learned of insolvency on the same day the doors closed. The pattern was not new even in 1931. London, 1720. South Sea Company directors sold their positions weeks before the public collapse, while pamphlets reassured ordinary investors. New York, 1929. Institutional brokers withdrew margin support from connected accounts in the days before Black Tuesday, while the financial press printed confidence. Different centuries, different instruments, identical architecture. Private channel runs ahead, public channel reassures. The gap was not accidental. It was institutional policy. Klaus and Helene had no headquarters access. They had a passbook and a branch manager who followed a protocol designed to keep people like them inside the bank until the doors closed. Go back to that kitchen in Hamburg, the drawer next to the stove where Klaus and Helene had always kept the passbook. 14 years of saved marks recorded on its pages. The number written in pencil on the inside cover the day Helene opened the account in 1917, with a line drawn under it. By August of 1931, the passbook was still in the drawer. The number was still 800. The bank was closed. The apartment was rented to someone else. The forensic record reduces to 3 components: a 2-speed information system, a reassurance protocol that keeps retail depositors inside the bank while institutional actors exit, and a window: days for the first wave of alerts,
weeks for the slower failure that follows, during which the wealth transfer is already complete before any public announcement.
Klaus and Helene did everything right. They saved, they asked questions, they trusted the man who looked them in the eye and told them their money was safe. The mechanism did not care. The collapse is not the moment that takes your money. The reassurance is. One question remains. The link to the full research breakdown is in the description. If forensic reconstructions of how institutional knowledge moves before public announcement are why you are here, subscribe. That is the only thing this channel examines. And then ask yourself the question Klaus could not. If institutional actors were liquidating positions while branch managers reassured depositors in 1931 Hamburg, how would you know if it was happening now?